Let's continue our conversation with Grant White. Grant, thanks very much for sticking with us. You have some energy ideas, including a couple of natural gas-focused players. Of course, natural gas has been plagued by oversupply, but you see happier times ahead.
Yeah, I think so. I mean, I think that we want to focus on quality in that space, certainly, and the companies that we're looking at are exactly that. In our opinion, have demonstrated their ability to grow consistently, especially over the last 5 years. And so we like the space. We do feel that because of depressed pricing, that we are getting pricing that is attractive to us. And again, with a focus on a more longer term approach, we're not so worried about or shorter term price fluctuations, but we are interested in taking advantage of value opportunities in these share prices. And so that's exactly what we're looking at with these companies.
Tourmaline has caught your eye, and also Paramount, another natural gas specialist.
Yeah, Tourmaline, I would say, is probably one of our top picks right now, especially in this space. And one of the things that we love about it, as I was mentioning earlier, is the consistency in revenue growth. Tourmaline has demonstrated that over the last 5 years in particular, they've been absolutely like clockwork in that growth and been able to not only increase their revenues, but also be very good at managing their costs overall. And they claim to want to be the lowest cost producer in the industry. And that's exactly what their management is I'd say hyper focused on. So we really like them from this perspective. I think that they've demonstrated the ability to manage through ups and downs. They've demonstrated the ability to increase their growth and ultimately their profitability. And so from a pricing perspective, we really like this. The other thing I like is that, if you look at their current dividend yield, it doesn't look all that attractive at around 2%. But if you look at the special dividends that they've paid, especially over the last number of years, and historically they've become known for that. Last year they paid about 7.8% based on a $66 share price, and so that's a very attractive return from a dividend perspective as well. We expect that the share price is going to appreciate. We think that we can see it easily around $77 from here, and so we like this one a lot. Paramount, another great company that we do like in this space. Again, nice dividend yield from them. They have demonstrated strong growth. Had you bought this company 5 years ago, I believe the figures I was looking at earlier today are you would have seen a gain of about 495% on your ownership. And so they've demonstrated that they can also weather storms. They were in losses in years 1 and 2 of that 5-year stretch, and then have generated nice profits since then. I do see that there's a little bit more volatility perhaps in that with Paramount. And so from that perspective, if we're picking one over the other, we're going to pick Tourmaline today, but I think Paramount's one that we're going to keep an eye on as well.
And you have another idea, U.S. company, Phillips 66. What's attractive there?
Yeah, so this is I'd say a very consistent play if you're looking for that, and especially if you're looking to get more into the refinery space. Phillips 66 is a good company that's demonstrated that they can be very, very consistent in their revenue growth as well as their profitability. So we like it from that perspective. They've been making big shifts into more cleaner energy types of offerings as well. And so if you're looking for a refinery solution that's going a little bit more green, Phillips 66 is one that you definitely should be looking at. We do see some headwinds here as well, and in particular because they're one of the biggest producers of jet fuel. If we do think that jet and aviation flights might be slowing down due to demand or just compressed wallets, that we might have a bit of a concern there from Phillips 66. But what I'd say at this point is we're not buying it today. It's definitely one that we're keeping an eye on. And out of the three, like I said, Tourmaline's at the top of our list, but Phillips 66 is another one that we're going to keep an eye on.
And you see upside for Tesla. Always controversial one way or another. I know some people are still mocking the Cybertruck, for example.
Tesla's a company, in full disclosure, I've owned this company personally for over 10 years. And when I bought it, it was absolutely a speculative investment. I just wanted to be really a part of the story. And I'd say that from a recommendations perspective for our investors, I would still classify it largely as that in terms of more of a fun money type of approach. But, we obviously they had great deliveries this week. And I personally kind of love it when short sellers get a little bit whacked. I've never really liked the short sale trade on any company. And to see short sellers lose about $3.5 billion on Tesla, I don't mind that. So from that perspective, I think that Tesla definitely, I would never bet against Tesla. It's a difficult one to buy in any core holding in a portfolio today. And as evidence, I'm reading Walter Isaacson's book on Elon Musk right now. I mean, the company nearly went bankrupt like 5 times in the since I've owned the stock, frankly. And so there's a lot of risk still there. And we are seeing slowing EV demand. We're seeing potential for political risks due to tariffs on potentially both sides of this. Mm-hmm. And so I do think that there are some headwinds there that you should be aware of. But Tesla, if they can fulfill half of the promises that Elon Musk makes, then the company's worth a lot more than it's trading at today. So I would say take a cautious approach with it. It's a speculative investment, but certainly not one I'd bet against.